Instacart is collaborating with Cut and Dry, an e-commerce platform for distributors, operators, and manufacturers, to expand its advertising presence beyond grocery stores. The partnership integrates Instacart's Carrot ads into the Cut and Dry platform, allowing advertisers within the food service sector to reach buyers and generate new revenue streams for distributors. This collaboration aims to create one of the largest digital advertising opportunities in the industry, connecting brands directly with consumers. On to Luminar, which has seen its price rise sharply this year due to overall bullish momentum in the semiconductor industry and anticipation of news about its partnership with NVIDIA at the CES conference. Although Luminar has seen weak business performance recently, with revenue falling 8.6% year-over-year to $15.5 million in Q3, investors are betting on potential positive catalysts for the stock. Speaking of semiconductors and NVIDIA, Micron's share price is also off to a bullish start this year after NVIDIA CEO Jensen Huang mentioned the company as a components supplier during his keynote speech at CES in Las Vegas. Huang stated that Micron's chips would be part of NVIDIA's upcoming GeForce RTX 50 line of chips, which will use the company's high-bandwidth memory solutions. The partnership could help alleviate recent concerns about Micron's growth outlook and highlight its long-term opportunity in the AI memory solutions market, with an expected expansion to a $100 billion market by 2030. As for Plug Power, it has experienced tailwinds from tax credit rules for clean hydrogen production, which are expected to benefit the company. Specifically, the U.S. Treasury has released its final rules on clean hydrogen production, resulting in an increase in nuclear energy stocks as many companies were hesitant to invest in hydrogen projects until the guidelines were established. The hydrogen tax credit, part of the Inflation Reduction Act signed by President Joe Biden in 2022, ranges from 60 cents to $3 per kilogram based on carbon emissions levels. The new regulations allow nuclear power and natural gas producers to qualify for significant credits aimed at hydrogen production, potentially unlocking billions of dollars in funding. Meanwhile, SERV Robotics announced an $80 million registered direct stock offering for roughly 4.21 million common stock shares. Institutional investors have signed securities purchase agreements. The proceeds will be used for general corporate needs such as operating capital. For more on SERV Robotics and these other companies, follow Ascencore. Thanks for watching and have a nice day.